This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices finished with daily gains on Friday after new sanctions were imposed on Iran's crude exports, but prices were down for the week as investors worried about U.S. President Donald Trump's renewed trade war on China and threats of tariffs on other countries. Brent crude futures settled at $74.66 a barrel, up 37 cents, or 0.5%, and poised to fall more than 2% this week. U.S. West Texas Intermediate crude finished at $71 a barrel, up 39 cents, or 0.55%. Reports of planned tariffs from the Trump administration reined in gains following the sanctions announced on Thursday, said John Kilduff, partner at Again Capital LLC.
Russia's Federal Anti-Monopoly Service may initiate a one-month ban on gasoline exports by large producers in order to stabilize wholesale prices ahead of the crop sowing season, state news agency TASS reported on Friday. But it quoted the service's deputy head, Vitaly Korolov, as saying an export ban was only one of several possible solutions. At the moment, major oil companies are allowed to export gasoline, but traders and resellers are banned from doing so, under a measure originally implemented last March.
Moving on to the top news in the energy sector.
The European Union will launch its joint purchasing platform for critical resources with hydrogen buying in September, 3 EU sources told Reuters. Critical minerals purchases will follow, possibly in the third quarter, while gas will be the last with no firm timing, said the three sources, who declined to be named. The bloc wants to pool buying orders to hand participants more leverage to achieve better deals for critical minerals, essential for the green transition, that are traded in thin and opaque markets dominated by China.
India's January fuel consumption hit its lowest monthly level since October, but was up 3.2% year-on-year at 20.49 million metric tons, oil ministry data showed on Friday. India is the world's third-largest consumer and importer of oil. The data is a proxy for the country's oil demand. On a monthly basis, January fuel demand was its lowest since October, down more than 1% from 20.73 million tons in December, the Petroleum Planning and Analysis Cell's website shows. Sales of gasoline, or petrol, eased 0.3% compared to last month at 3.3 million tons. Next, we have the top news in metal market. Copper prices hit their highest levels in 3 months on Friday and were heading for their biggest weekly gain since September, as the return of top metals consumer China after the Lunar New Year holidays eased fears about trade tensions. Benchmark 3-month copper on the London Metal Exchange climbed 1.6% to $9,422 a metric ton by 1700 GMT, having hit its highest since November 8 at $9,507. The contract is up 4.1% this week. It is China which is really fueling the rally in the past 48 hours since their reopening, said Alistair Monroe, senior base metals strategist EMEA, at broker Morex.
Dalian iron ore futures prices hit a 4-month high on Friday, logging weekly gains as steel demand in top consumer China recovered after the Lunar New Year holidays, while support for the property sector also buoyed sentiment. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.86% higher at 817 yuan, $112.11, a metric ton, gaining 1.36% this week. The benchmark March iron ore on the Singapore Exchange was 0.08% lower at $105.85 a ton at 0705 GMT, logging a weekly rise of 0.23%.
We will now look at the top news in the agricultural sector.
Global wheat imports are likely to drop this year as slowing economic growth among top buyers, a stronger greenback and higher local cereal output curb grain buying, putting pressure on prices despite world inventories headed for 9-year lows. Slower purchasing by top importers could put a cap on grain prices by offsetting concerns that unfavorable weather in the Black Sea region, the world's biggest exporting area, India and the United States will curtail output. Top importer China is expected to buy less than half of last year's volume in the first 6 months of 2025, while demand growth is likely to slow in Indonesia, the world's second biggest wheat buyer, and Egypt, the number 3 purchaser, millers, traders and analysts said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.